fundsupermart.com.
Many commentators are lamenting about slower growth in China and the lack of catalysts for the economy. What's the Fidelity story for China, Catherine?
So Jing, who's a fund manager of the China Focus Fund at Fidelity, believes that 2015 will be an interesting year. And it's a year where the government will have to actually implement a lot of the reforms we've been talking about, or they've been talking about, over the past couple of years. So in summary, she thinks that this year, in terms of headwinds, will be cyclical, such as the property sector and wanting to see stability in property prices, but the tailwind is going to be very structural. And by that, state-owned enterprise reforms, the continuation of anti-corruption measures, as well as the Chinese aim of creating the new Silk Road.
So how has the Fidelity China Focus Fund positioned to benefit from these reforms?
Jing does have a value contrarian type of approach. So there's a combination of both state-owned enterprise names as well as new China names in the fund. When we look at state-owned enterprise reform, though, not all state-owned enterprises stand to benefit from the reform, so it is very stock-specific. In addition, the fund has about a 15% exposure to the mainland market. And so the fund very much benefited from the massive rally we saw in the second half of last year because of the A-share stock market recovery. And in fact, whilst the fund was very much positioned for this, Jing was actually taken a little bit aback about the magnitude of the rally we did see. And then the Chinese announced last year the recreation of the Silk Road, so dubbed One Belt, One Road. And the significance of this is they want to create not just maritime routes, but also land routes in terms of railway, going from China all the way through to Europe. It is, however, more than just a physical route. It's a concept or a movement. So, for example, the Chinese exporting a lot of their expertise and helping other countries, for example, in Africa or South America, build up, let's say, healthcare, and Chinese companies going in there with their knowledge and know-how. And in a way, this movement is basically about the Chinese gaining more power on the global stage.
You mentioned that Jing has value approach. How does that reconcile with her large holding in Tencent, a rather expensive internet play?
Yes, Tencent is expensive, but it's worth noting that while she's value or has a value approach, she just doesn't buy something because it's dirt cheap, because who knows, that could get cheaper. So what she is looking for is the growth prospects and the earnings prospects, the market share growth, etc., of a company. From a risk perspective, though, because Tencent does have quite a meaningful exposure or position in the benchmark, while she has about a 6% position in outright terms, she is underweight by around 3.5% versus the MSCI index.
How has the fund performed in recent months?
In the second half of 2014, the fund did extremely well, predominantly due to its A-share exposure. Now, whilst the market has had a massive rally, she does still think that the large cap names, despite her taking a bit of profit, locking the profit in, continue to have a very attractive growth prospect or good fundamental analysis. So she still holds, for example, Shanghai Auto and China Life. Also benefiting the fund were her railway names. There was a big merger between two railway equipment operators in December, and that greatly contributed from a stock selection perspective.
Thank you, Catherine.